prints. So we're waiting for an inversion once 953 has already printed, or 1034 has already printed. So this is 953 here. I think on maybe like the next candle, it'll actually show that this is the root candle. So here, once 953 prints, we do close above this inversion right here. So I'll just drag that out. Guys, feel free to ask questions as I go through this. You don't have to wait for me to stop talking or anything. I'm just gonna kind of power through. Hey Frida, nice to see you. Miss you, bud. I haven't seen you in a long time. Haven't talked to you in a minute. Alright, so like this, we have this inversion, right? We just closed it on the 954 candle. We can take this as an entry. I would personally use the swing low closest to the inversion as the stop loss. So again, we're not using any higher time frame anything. We're not using any daily bias, just the model at its most basic form. We do plan to add more to this in the future, or we kind of couldn't come to a consensus of what we wanted to add to the model as a group in our last refinement. All right, so see, midnight right there is 1-to-1. So I think that's fine. We do have the rule that we shouldn't take a trade if TMSO is before the target. So we can choose to not take this, although I do think midnight is a strong draw. And we have, you know, multiple inversions, or we have this one inversion below us now. So let me see here. Let me pull up the R, which will be fine. Okay, yeah, so 1R, 1.5, 2. So the rule for TMSO really stems from our last back test, right? So in this case, or the rule really was that we shouldn't take a trade into TMSO if it's within like 5 to 10 points of our entry. So in this case, it is about 25 points away. So I think any of us, like, even though we don't get to the full 1R if it turns around here, I think most of us probably were experienced enough with the Q3 inversions that if it starts reacting to TMSO, we're more than likely to close, right? Or at least trail our stops by then. So I'm gonna go ahead and, you know, take this, or, you know, play this through to see what happens. So see, 953 is now showing. This is the open here. Our entry is basically there. We are not tagged into the trade, and looks like it's going to go to the target before giving us an entry. Okay, so no trade for us here. Now I want to point out this. So this small BISI here, this small bullish fair value gap, if we would have closed this coming into our entry, we would have removed our limit order. So basically that, and the reason for that is because of the rule that we have to close the trade if an inversion prints against us. Now mind you, this is a 1 minute model, right? So it's very high it's not high probability. Actually, it only occurred for us 12% of the time, but you're likely to get some type of inversion against you, right? With you trading the 1 minute time frame. And so, of course, you can apply your knowledge to this in live trading, right? Like, you can apply, like, I'm bullish because the hourly closed over the last hour, or I'm bullish on the day, or, you know, we're above midnight, we're above TMSO, whatever floats your boat. Whatever you actually use in your analysis, you can obviously apply to this, and you can still implement this in its most simplistic form. So just keep that in mind. You don't necessarily have to follow it rule by rule. Just know that with none of that, it still does have a 60% win rate. So we just play through, and again, we allow up to early Q4, which we're defining as the first 11 minutes. So if Q4 starts at 10:08, we allow until 10:19 for an opportunity to occur. So in this scenario here, this is another example of a inversion that's above the root candle. It's not necessarily nested with it. hold on a second, let me track the trades here. So we have one trade that we got no entry, and this would be like, if I'm tracking this on the data sheet, for example, this would be an example of where I would put not applicable for the root candle. So this category here, for those of you who are looking at the sheet or plan to look at the sheet, this category here is when we have a root candle that is allowing for confluence with the model. This category here we are using as a target, and we are if we use a root candle as a target, then we're selecting it here. Hold on a second, let me look at this rep to see what happened, why I don't have a target. Okay, the target was 1R, looks like. Yes, the target was 1R. Okay, so that's how you can decipher the difference, like whether we're using it as a target or as an entry. Alright, so we have this one here. So in this case, what this trade would look like is we have the entry there, stop loss at the swing high. Now that's 18 to 22, 4 points. I don't think that's like a crazy amount to stress myself over, so I'm just gonna go for the actual swing high. I was off by 1 tick. So let's see if we get an entry into the inversion. Doesn't look like it. It is aligned with the daily open. It is also aligned with another root candle. I can't see which one it is. 658. So it's already halfway down, or halfway to our target. Let's see if it tags us in. Okay, so see, in that case right here, like as soon as we entered the trade and it closed this inversion right here, even though we would half our stop would be, or we would be in drawdown, I would personally, live, being the trader that I am, I would personally close that trade, right? But as a group, the consensus was that since we've already put the trade on, if the candle closed here, most of the group said that they would just let the trade ride out. Like they would allow themselves to be stopped out, just to see if it, if it happens to go in their direction, and if not, they've already accepted the risk on the trade, so they're just gonna let this inversion play out. So the rule specifically for closing on an inversion against us is if the inversion occurs before we tag 1R. So if I pull this here and 1R is here, and so in this case it technically didn't, it already we weren't in yet, but like if we were already in this trade and we tagged 1R, we would have been BE, right? So if an inversion occurred in this area, let's say, and we were in profit on the trade, then that's a scenario where you do close the trade to preserve the capital that you have remaining. But most of the group said that if they had their limit order waiting here to enter, and then the inversion closed upon entry, like, we don't know, we can probably break it down into seconds. Let me see if I can drop down here. But if we were to drop down, let's say I'll drop down even into the 15, right? The minute that, or the second that we tag our entry is here. So 15, and then over the next, as that minute is printing, we come down and we're in profit for, like, I guess 5 seconds here, right? We come back down. So here, while this candle is still printing and 1012 is still printing until we get to 1013, you don't know if it's going to close below your entry, right? But once 1013 opens here and 1012 closes, this is where everyone said that they would just let it ride out and let themselves get stopped out if that's the case. All right, so this is one loss. Let me just add it to the chart, actually. All right, and So we'll do wins, losses, break even, no trade. Or no entry, I mean. I'll leave this one blank. So far, for wins, we're at 0. Losses, we're at 1, A2, so B2. 1. And for BE, 0. A4, no entry. We're at 1 for that too. Okay. So we're keeping track of it down here. Alright, so we have until 10:19. Okay, sorry. So as we close through here, you are able to take this as an entry to go long. So once you close this and you're out of your last trade, like as long as you're stopped out of your original trade, you can take another entry. All right, so I will move forward now into early Q2 after 1034. So although 1034 has printed and there may or may not be inversions nested with it, we are not taking the trade until about 1104, I believe. Okay, so here we are. So see, this is a scenario where we have this one nested with it, right? Then you also have this guy. You have, oh wait, that's not an inversion. You have a bearish one here. So the refinement that we made after going through the data was that we're not going to take a trade if there's several nested inversion fair value gaps. So see, we just have so many here. So I'm gonna choose to not take a trade. Even if I think I know better, I'm gonna choose to not take a trade and just let this play out a little bit longer. Something a little bit clearer, like maybe wait for the high or the low of the 90-minute cycle to be taken first and let a new inversion print before trying to take the trade. Why is this, seems like it's printing faster than I want it to. Alright, so now we have the 1110 root candle. We're actually in Q3. We've taken the high of the 90-minute cycle, at least. We didn't take the actual high. But if I pull this out, this is the first candle in Q1. So the first candle of this 90-minute cycle. We did take that out and then create the inversion. And it is nested with the actual 1110 candle. So we shall try to go short here. And we'll put the stop loss at the swing high, of course. And we'll target 1034. I don't remember the stats on 1034 as far as the target, as far as it being a target, but it was better than 953. 953 was just a shit target for the model altogether. Alright, so let's see if we get an entry. It doesn't look, I mean, it's expanding pretty fast. Doesn't look like we get it. Alright, so it taps 1034 here. I don't like that. Taps 1034 and expands up. Just gonna let it, again, we haven't closed this one here. I'm just gonna let it play out. We do have this scenario where there's multiple inversions in this area. Alright, we're tagged in. Alright, TP. So that's one win here. B1. Alright, and we shall move on to the next opportunity. And you can obviously aim further, right? The rule is just to trail to break even at 1R. Let me pull that back up actually. So at this point here, oh wait, we would have been stopped out break even. because we would have wanted tag 1034. Oh no, our entry was here. Sorry. So we got tagged in there. So once we got to here on this candle, we would have been break even anyway, which is the same candle that hit our TP. I just wanted to make sure I didn't overlook that. I forget that trading view candles print in like 2 stages. Alright, let me check this. Low 408, high 407.25. Am I seeing that right? Low 408. Okay, never mind. Sorry. Alright. Nothing new yet. Alright, so this is a very, very tiny Sibi here. And this is occurring after we swept the 90-minute cycle low. Let's just pull this out. I don't think we get an entry, but you know, due diligence. Alright, and it's into 1034. I can't say I like this as a trade, or I wouldn't take this as a trade personally, but again, just for the sake of following the model mechanically, I will entertain this. So 1034 is 1.5 R. We obviously already tagged it. In this scenario, technically, once your target is hit, or in general, once a target is hit from the entry that you wanted, consider that trade null and void. Let me see how far TMSO is. Okay, it's within 10 points. Okay, yeah. We're gonna oh. I'll just let it play. Okay. Yeah, I was gonna say, we'll just take the opportunity off since we went past the target even more. Alright, so here we have the new inversion. It's the CE is aligned with TMSO. I will short this. Stop loss is 31 points. Our next time-based level, the 90-minute cycle low is here. That's not 1 R, so that's not enough. So we will target true week open in this scenario, which also happens to be the 658 root candle. Okay. Alright, so I'm watching this to see if we close this. We don't want to close this. If we close it, it's an automatic close of the trade. Oof. What a headache. Okay, we don't close it. And there we close it. Alright, so we will consider this a loss, even though it's not the full loss. Alright, so this will more than likely be the last opportunity that we can take on this day. So 49 would be the last minute. Okay, and it doesn't tap any of these inversions. We do have this one here that is nested with 1034. We close it there. I can't recall if I tried to take this as an entry. Oh yeah, it went past the target. Okay, no, we'll let that fly. All right, so we'll go to the next day now. Let me go to the hour. Come on, what's happening? Okay. What's happening, trading view? Why isn't the 1 hour moving? Okay, we'll go that way. So we're just going, this is only for the New York open session, so we'll go into 9 a.m. back into 9:53. Sorry, bear with me. I don't like to use the play button because I just almost always play it too far forward. Okay. Get in closer. I'll go into the... Oh, sorry. I let it print. Okay, so 9:53 is here. We close this fair value gap right there. This is actually nested with 9:53, so that's great. 9:53 prints here. We don't close the inversion until here, so this candle would have been our entry. Let's pop it on there. So again, I'm just taking the swing low closest to the inversion. What do we have up here? This is a NWOG, this gray box. 8:30 midnight. We'll target midnight. That is over 1R. So again, the candle that would have tagged us in is right there. I will also pull up the R. Okay, so we don't get to 1R until we actually tag the NWOG. Ooh, okay. I don't know why it's printing so fast. So this right here, this is exactly what I'm talking about. See, like this is, and I don't know how often this is happening in current data, but in the last quarter, it only happened 12% of the time in our data testing. So here we close the inversion. Again, we would just close it. The consensus with the group was that they would just let it ride out because they've already accepted the risk. I'll let it play just so we can all see what happens, but I personally, when this is live, I would just close this right away, just because I've been that person live. You've definitely seen me live do it, where I've held the trade past an inversion closing against me, and I end up getting I just end up holding it too long for the stop out. So this would be the next opportunity. I'm just gonna keep this one up under the premise that we let this one ride out, but this is the new inversion here. This guy. And I would have the same target probably. Let's see, the daily open is less than 1R, so I would still aim for midnight. I'm going to consider this one a loss. I'm just going to track them both at the same time. Okay, so, oh, wow, so 9:53 is there. All right, so let me preface with this. This is a scenario where we have 3 nested inversions, right? This one is bullish, this one is bearish, this one is bullish. This is where you, and of course we're in the first 30 minutes of the open or first 40 minutes of the open. This is where you can decide not to take a trade. Okay, we have both inversions print against this. Okay, this is getting gross really quick. Okay, so see, again, we have a bullish inversion, a bearish inversion, and a bullish inversion. So this is really, really gross. I'm going to consider this 2 losses. This is A2. Although we didn't hit the full stop loss yet. Again, I will just play this out for you guys to see what happens. Oof. Okay, great. Both of them end up being losses. Alright, and this is 10:08. Alright, so we are beyond the point of taking an entry. The last entry we could have taken is the last one that I did take, which was there. So now we will move into early Q2. And this is just this previous week of price action. You guys can't tell. We're on Wednesday already. Alright, so 10:53, 11:04 is the soonest we can take a trade. Alright, so again, we just have, alright, that's a fair value gap, not an inversion. We have this one here. We have this one here. We have these. And we have these. This one. No new one here. So again, although we're trading away from 953 now, we are also under 1034. I would just wait for a clearer picture. This is a scenario in which I would choose to not take the trade. Alright, 11:10. Pull this one out. So I would take a new trade here if we took the extreme of the 90-minute cycle. So if we took the high or the low, we have a new inversion printing, a new fair value gap and a new inversion printing. I would gladly take that. Currently, as it stands, with all these inversions being from Q1, yeah, they're all from Q1 actually, and yeah, not a single one. Oh, this one is from Q2. This one here. So let me pull all these back. I don't want to take any of those trades basically. I want something new to occur. Low 488.50, high 488.50, no fair value gap. Displacing away from 11:10. So we're hanging out in this big one. Alright, so we have a new fair value gap there. Alright, so we do have this new fair value gap. We are about mid-range. I'm not too confident in this as a trade. Discretionarily. So yeah, EQ is here. We're the inversion is happening right there. And then we have another inversion here. I'm gonna just choose to not take this as an entry. We are in Q3. I'm starting to see why January was a struggle during New York. Alright, so it wasn't tagged, just for the record. Alright, we have a new inversion here. Again, there's just so much noise here. And then yet again, another inversion. This is really gross. This is nasty. And yet again, wow. I feel for you guys. Did all of you guys trade this? I haven't traded New York this week at all, basically. Okay, I think we're beyond. Yeah, okay. So now we will go again to the next day. That would have just been a no trade day for me. The 15 also looks gross. The 1 hour actually doesn't, the 1 hour is deceiving, doesn't look bad. Oh, that's why. That is why. Or maybe it's not why. I want the 1 hour print. Okay. Thank you, TradingView. Now this won't print. What's going on? Oh, I just realized I'm on continuous. Oh, it's because of the root candles. TradingView is punking me today. Was Wednesday FOMC? Yeah, it had to be. Okay, that makes sense. I'm about to give in to that play button. Alright, 9:30, 9:45. Alright, so 9:53 root candle is here. It'll probably show on the next. So the open is up here. And then we have this inversion that we close and this inversion. So this is interesting because discretionarily when we backtested this model, the question is like, okay, when price is expanding aggressively and you have several fair value gaps and you're printing new inversions as you close over them, which inversion do you take, right? The rule was that, or what we kind of came up with was that we're not going to follow the inversions as they print, because then it can just go on and on forever, right? You can follow it all the way down and say, okay, this inversion is here, this inversion is here. We'll just take the very first inversion that printed. The rule that we made to kind of eliminate and filter this was that, okay, we will take any inversion that is nested with the root candle. In this case, we have 2 inversions that are nested with the root candle. So I would just pull premium and discount. This is not a part of the model. Discretionarily, I would do this. I would pull premium and discount of this leg down, and I would just choose to take the one in premium. In this case, I don't really know to track this as a rep. Let me just print one more candle and see what happens. Okay. Kinda doesn't give me more. Let me see here. We did print over the CE. I'm gonna let more data print. Okay, still doesn't close it. Alright, and now it does again. So, and now we have even a new inversion. This guy here. And all 3 of them are nested with the root candles. 953 is really fat. Let's see how many points that is. 40-point candle. I'm not gonna take a trade. Okay, so If you would have taken the 953 as or that inversion specifically of nested with 953, the very first one, the trade would have looked like this. So the stop loss again is at the swing high. We would have targeted, true most open probably isn't 1R, nope. So we would have targeted at least midnight. We're not there yet. Okay, so it tags it right there. I don't think I would have taken this live, but there is a lot to go on here. So this red line right here, which again is also not a part of this model, this red line is how I trade. This is London session high, right? So we take London session high, we have an inversion right above it, and it's nested with 953, and in this leg down you have this inversion landing in premium. So this is the most optimal inversion to take, just with that narrative in line. But with this model, as we tested it, there's no narrative that we're applying aside from the inversion happening during this time frame nested with the root candle. So because there were several inversions here, I just didn't take that as a rep. But you know, I just wanted to show you what that would have looked like had you decided to take it. Okay. This is Thursday. Okay. This dotted line is the event horizon. We have an inversion here. No root candles. We only have 953 there, which we've traded away from. We are also in the extreme of the 90-minute cycle. We're at the lowest low. Let's see if we have a level. I did also learn in the data refinement that ICT levels are not the best to target. So things like, which is basically just higher time frame targets, right? But like the daily open, the weekly open, the monthly open, these things did not have a high win rate, surprisingly. I think they were like in the 30% win rate for that. So let's just say theoretically we were to take this inversion, our stop loss would be there, and we would target the daily open. Okay, it is over 1R. We are shorting the low within this, you know, immediate price action. We are shorting the low. Okay, we're in. And again, we close the inversion. Good gracious. I will also consider that a loss. A2. Oh, and this place is right back through it. Fantastic. I'm gonna let it play out so you guys can see what happens. Alright, so here, right? So your trailing stop with this model, once it hits 1R, you would trail to break even. You would have taken a partial and removed risk. So you would be even out there. And then it TPs. Okay, so see, this is an example of where the rule would have worked against us. If to recall off the top of my head, we had 10 reps that we used this rule out of the 60 we tested. So that's about 16% of the time that it's occurring. I don't know why I kept saying 12. It's 16% of the time that it's occurring, this inversion against us. and 4 of those 10 times were losses, and 5 out of those 10 times were profitable, and I think only 1 was technically break even. There was an additional scenario where the inversion occurred at 3R, right? So you're already past the 1R, you've already removed risk from the table. So with that being said, you know, it doesn't count as like a scenario where we're tracking this to see like if it worked, because the trade obviously played out by then. You already achieved 3R. But again, the consensus of the group when we were reviewing this rule was that if the inversion is occurring and it is before 1R, and you've not even expanded into profit, and you're kind of just in drawdown, like it hasn't necessarily displaced away from your trade, you would let this play out. Now again, mentally, personally, I would just close it. I don't actually trade 1 minute models anyway, but if any inversion is printing against me and like this is supposed to be a quick scalp, for example, I would just personally close that. So although the rules that we have in place would have allowed this to ride out, I would close this here. So again, once this candle printed, I personally would be out, and then obviously it displaces right back through on the next candle and then expands right into your TP there. All right, let me clear that. Let me double check this. This inversion is happening at 10:12, 10:08. Okay, so that's valid. The last trade that we can take is at 10:19. All right, so now let's go into the next cycle here for 10:34. And the earliest trade we can take is at 11:04. Alright, so we're at the lowest low. And I want to point out with this trade, we did short the low here, and that seemed to work out. This gray box is an NWOG. This is another time-based level that was not a good target in the backtesting for this model specifically. All right, we don't close this one. Okay, no inversion. We have this very, very tiny one here. Let's say we go long. Stop loss would be at the swing low. And we would target 1034. TMSO is right next to the target. Let's see if it gets us in. And no entry. No entry 4. We are here at 1034. We're in Q3. We close above this one here. And we have this swing low, so that could be a tight stop to take. We have all this LR. This is pretty much the classic Q3 model that we've always traded. Additional confluence or additional ICT confluences that were above this NWOG heading into this dotted line is the 50% mark between these two end walks, basically. Long on this high. Oh wait, that's the wrong position. And okay, this one is closer. I'll use that swing low. Drag this over. Our target here would be New York Open, which is 730 open. You can also just target the high of the LR. The 90-minute cycle high is here. So, you know, I don't know. Are you going to be a dick for a tick? 43, 47. I'm just going to aim for the lowest hanging fruit. And again, let's just see if we get an entry first of all, or if it just expands right into the target. Okay, there's the entry. Okay. And again, it closes the inversion. And we get stopped out. Wow, lots of losses this week. So it runs this liquidity. This is actually my favorite model to take as an ICT student. I like to take the liquidity purge of the order block, which is basically, well, let's see first. So I would anticipate at that point, yeah, okay. So what I wait for, because when this occurs here, right, and then we expand past this, when this candle is all the way down here and it hasn't closed yet, this looks like it's gonna be a market structure shift. So when it ends up being a failed market structure shift, it ends up being a liquidity purge. So that is my favorite entry to take for, you know, all the ICT students that are just taking any reversal that's occurring. I'm mostly looking at the continuation instead. And so any reversal that they think is going to turn into a 2022 model, I'm actually taking that as like an add-on or something like that. All right, so we got stopped out there. I already tracked it. And we're past the point of taking a trade. All right, let's go to Friday. Alright, terrible week to replay, unfortunately. Doesn't showcase how well the model was performing, but maybe as we move through data, it doesn't perform well. We're halfway through November right now in the data. Sorry, guys, let me just get through this. Alright, we have 9:30, 5, 40, 45. Okay. There's 9:53 at the extreme of the 90-minute cycle. I already like that. And we have our first inversion. We shall short it. Again, stop loss at the swing high. Right above the inversion, our first target appears to be New York Open here. Tagged in. Let me pull up the R. Alright, we are technically already break even. So once it tags 1R, we are break even. We theoretically have trailed our stop and taken partials off the table. This is under the assumption that most of us do trade multiple contracts. So, sorry, hold on. There. It'll probably tog us out. Okay. Stopped out break even. That's our first technically break even trade. Alright, so we have another inversion there. This tiny guy. If we get a third inversion in this area, it becomes no trade. Long. Stop loss. Alright, and do we have any targets even in the vicinity? Okay. I don't think we do. Unless we... I can't even pull up root candles from that far back. Okay, we have PM open. This is at 9:34. Okay, 70 points away. No big deal. Let's see what happens. We have a it's only a 2R trade. We have a 20 point stop. 27.5. Alright. Probably no entry. Alright, new inversion anyway. So the limit order would be removed because you have a new trade idea. The role for the new inversion is again based on the premise that if a new inversion is printing, you basically have a new opportunity to take another trade, right? And that's just how JD trades. He trades 90-minute cycles at a time. Of course, you guys have all seen him hold for sure, and he is a great holder. But it's like, if you can get out and partake in the next move, why not? Instead of, you know, holding through drawdown essentially, which is where that, like, that's the foundation of that rule for this model. So let's just say we take a short here. I don't think we actually like reached any higher time frame level. This will more than likely get stopped out. Again, I would just execute it mechanically. That is the point of the exercise. So we have 10 a.m. open. That is not necessarily a level for us. I think the earliest, where is 9:53? Why is it not showing? I accidentally deleted DTT. How did I do that? Okay. It's not on my defaults. Why? Hold on, guys. Okay. There we go. Alright, so 9:53 is there. Apologies. Alright, we're technically in on this candle. Once this closed, we would have placed a limit order. It would have been tagged in. Wow, spans right down. We are probably already at 1R as well. Yep, so we are currently BE. Gross. Oh man, I lost my thing. Tough. Hold on. Hold on. Ah, shucks. Okay, I mean, I think we were at 6 losses, 1 win, and 1 BE so far. Or maybe 2 BE. Oh, 1 BE, and this is the second. Alright, so 8 trades so far out of that. I think there was the 1 win that I said I would get out of. Roll wise, that would have been a win. We technically would have stayed in that trade. So there's a second win, but nothing to, you know, go crazy over. Alright, so we have 1 inversion here, 2nd inversion there. Oh wait, we have the 2nd one there. And the 3rd one here. Ugly. I wouldn't take a trade here. Alright, yeah, and then another inversion here. So this just becomes a no trade area for me. We will move forward to the next quarterly cycle. There's 1034. 11, 1, 2, 3, 4. Alright, 1104 closes an inversion. And oops, short. And we'll see where TMSO is. TMSO is over 1R, and it happens to be the high of 1034. Again, we're already in because I play it too fast. Ooh, just misses 1R. Alright, we're break even now. Darn, and another inversion prints against us. So we've already removed risk anyway. You can, again, this is a scenario where I think you can play at your discretion, right? You're up 7 points. So you're up 140 bucks. Do you want to preserve that 140 bucks, or would you rather let it play it out and potentially hit your target? Now, we came within, like, we whispered in our target's ear. So the low here is 933.50. Our target was 933 anyway. My personal experience with this is I wouldn't be a dick for a tick. I would just personally close this out, right? It came that close to it. It missed it. I would close it out here since we have the inversion printing against us. Rule wise, this would technically be a close. We are technically in profit here though. Let me delete this. So I would consider this a win instead of a BE. I'll play it out just so that you guys can see what happens. Okay, so it goes BE anyway. I would consider that a win because, again, for the rules, we would have closed right here in this candle in profit. Alright, so where are we? We're still in Q2. We can still take more trades. This is Friday. We have the new inversion there. We have 1110. We missed 1034 and TMSO below it. We will long this. Stop loss at the swing low. We'll just aim for the high here, since I don't think we have any other targets in the vicinity. We're in. We almost closed the inversion. 1R is all the way up there anyway. Darn. Darn, darn, darn. We close it. So we close this one here. Again, this calls for a close of the trade. I will consider this a loss. Let me add it. The consensus of the group was that we let this trade ride out. And stop that. Alright, and let's finish this cycle out. Alright. Ooh. We close that one there. Upon entry, or what would be considered the entry, we closed right back through it, so it invalidated it. 1030, it is nested with 1034 as well, so that sucks. Again, that would just be an immediate close had you already entered, but once it's closing through, like if you get the entry and it starts to close through your original inversion, you would just close that automatically. So you would either take a small loss or basically be BE. We get another one. Also nested with 1034. 1034 was not the best entry candle at all. It had a very, very low win rate. This is over 1R. And again, I will consider this another loss. Wow, this was a tough week. This was a tough week for this model. Okay. And we'll go until 49. Okay, another one. This is probably going to be our last opportunity to long this guy. $10.34 isn't 1R. We'll aim for 953. TMSO is also actually a viable target, also over 1R. We will aim for the lowest hanging fruit. No entry. Okay. We get this inversion here, so we want to see that invalidated right away. Again, the consensus being that you would let that ride out since you were hardly in profit. Brutal, brutal, brutal. You gotta get another inversion. Good gracious. Okay, stopped out. Okay. So that for this week of this entire, from Monday through Friday, although I don't know if we actually tested Monday, because it seems like we got to Wednesday really quickly. Maybe I just am used to backtesting this model now, but we had an overall total of 9 losses and only 2 wins, 2 break evens. So we had 13 trades altogether with 9 losses total. That's actually very brutal for this model, and it does not reflect the data that we collected on it at all, unfortunately. So again, we're about midway through November on this, so maybe as we move through December and January, maybe the data changes significantly. But that is like, I mean, it is consistent with the last 2 weeks of this model, right? Or the last 1 week of this model, which was election week. So during election week, we went through brutal losses, right? And the main culprit was that there was just too many inversion fair value gaps all in one area. So this rule needs to be implemented for sure. If you have 3 inversions and one is bullish, one is bearish, and one is bullish, and they're just not all in agreement, I would just say stay out until you have something better. But yeah, that was actually really rough. So But that's what it is. That's what backtesting looks like. It just I wanted to see what it was going to look like in the past week. It even intrigued me more since a couple of you mentioned that January has been hard for you. So yeah, I'm sorry guys, I completely missed all these questions. I don't know why my internet is being like this. Hold on a second. Yes, sorry. Oh my goodness, I didn't see any of these questions. Steven, he's not even here yet anymore. Okay. Wow. My Discord didn't show me any of these questions until now. I'm so sorry, guys. Okay. All right, sorry. Okay, so if any of you guys have questions, feel free to fire off. I just caught up with everything. I think all the questions that are in here, none of them are in here anymore. So I will definitely. I don't know why I didn't. I don't know. I have no idea what's going on today. Trading View is going slow. Discord is going slow. Let me. Seriously, I'm gonna double check my internet speed. Because that was just insane. Okay, yeah, my internet speed is good, so I don't know what's happening here, but I didn't see any. I literally just got the notification that that there were 26 new messages, so that's tough. Yeah. All right, guys. We're gonna hop off. We'll call it here. I did record this session, although I did basically just talk to myself the entire time, not having seen any of your questions. But yeah, it's really unfortunate. I thought that doing this a market replay would have revealed the same stats that we've been getting in backtesting, just for this previous week, and it did not, unfortunately. But we will maybe do this every Saturday. So maybe Mondays and Thursdays we will do the regular data collection, and then on Saturdays we'll do a market replay of the previous week just to see how it's acting in current price. Yeah, no worries, Cozy. If you need me to do a later time on Saturdays, always feel free to let me know as well. I'm down to experiment with different times, since the attendance is always fairly low anyway. Again, I did a survey on what times everyone wants me to backtest. Tuesdays, Thursdays, and Saturdays ranked amongst the highest, and yet here we are with a seven people in the audience. For this model, your test, does one just take the trade only because of the inversion that got displaced? Yes, literally the rules are, this is in its most basic form. So we are just taking an inversion that's printing at a specific time. And then if that specific inversion is happening around an inverse or around a root candle, I apologize, then that root candle happens to be offering displacement, offering confluence, then at that point we can take the trade. And again, we're not implementing anything higher time frame yet. We're not offering any 5-minute or 15-minute bias. We're not offering any daily or 1 hour yet. We tried to come to an agreement on what we wanted to add to it in our in our Thursday session, in which I went over all of the data to review where we are so far with it, and there wasn't necessarily that much input on what we wanted to add to it. I do think we should add some bias. Yeah. Okay. Yeah, that's clean. Yeah, no, yeah, I agree. That so yeah, like there are things within the model as it is right now, just the way we're backtesting it, that are not necessarily the way that JD trades it, because he does trade it with a bias. He does trade it using premium and discount, right? That's been like those are the two things most traders are saying to me when they hop into the backtest session, and I get it. And like 100% he does trade it that way. what I like to do is I like to start the back test with the models stripped down to the basics, so that anyone can literally take the trade and they don't necessarily have to have any of the higher time frame framework to support their idea. So if we're just focusing on the 1 minute time frame, what does this look like, right? If we're just looking on the entry time frame, what does it look like? And in backtesting, it did perform very solid. And with this data collection, we did also collect it in the form of market replay, right? So it was exactly like it was just now, what we did together on TradingView. And then I recorded the reps as is. And as you can see, we did also take losing streaks. We did also have some stretches of winning streaks, and there were a fair amount of trades that we took partials as well. So I mean, we kind of just have to see how the data plays out over the entire quarter. So far, we only have 1 month of data. So, you know, long story short, yes, it's literally just the inversion that's occurring around the root candles or after 9:53 and 10:34 has printed. And it's happening specifically from late Q2 to early Q4. And I think it's really, really simple. And again, just the way to kind of filter out if you're going to take this trade or not is, you know, are there several inversions printing? If so, I'll just wait. Because, you know, in waiting, you are preserving capital, and there's nothing wrong with that at all. So yeah, guys, any questions, anything non-related to the back test, you can feel free to share whatever you would like to share, or we can talk about whatever you want to talk about. And then if not, we shall hop off. We call it a day here. We reviewed the entire week. All right, cheers guys. Have a good one. See you guys on Tuesday at 7 p.m.